how has public debt spiraled out of control?
Yeah, I'd like to answer that in a couple of ways. I mean, the first thing is just to look at some of the recent causes of the increases in debt. So we've had two major crises in the last decade or so. We had the global financial crisis and we've had COVID. Both of those resulted in significant increases in government debt. They've been wound back a little bit, but in both cases, debt went up a lot. There have been other causes too, like the aging population in many countries, the increase in demand for health expenditure in many countries, low interest rates in the recent past has also encouraged governments to spend a lot more than they could. I mean, there's also, I think, in democracies a fundamental tension between tax, on which there's always downward pressure, and spending, on which there's always upward pressure. It's like a scissors effect, which means that governments have increasingly had what economists will call a structural deficit. It's where their revenues are consistently higher than their expenses, and they can't get that under control, so they borrow. And we've seen that pattern continuing in really in many countries. And I think associated with that is the issue that the nature of democracy is that governments try and spend money on things that people want them to spend money on. So it's much easier for a government to introduce a new program or to increase expenditure than it is to cut expenditure, to reduce expenses. So there's strong political incentives to be spending more money, and you can see that in the way that elections are carried out in most jurisdictions. That there's a lot of promises made during an election campaign, and that's just adding to the pressure on government spending. And there's, what politicians like to do is promise tax reductions and spending increases, and that leads in only one direction. A long time ago, I read an article by a guy who was the economics chief in the Financial Times at the time, Samuel Britton. It was called The Economic Contradictions of Democracy, and it was a good explanation of why governments can get into this sort of position, into the debt position that we see. But having said all that, and you're clearly right that debt has increased quite significantly, the one thing to bear in mind is that if you're looking at it as an accountant, you're not just concerned about debt, you're concerned about the whole balance sheet. In other words, you're not just concerned about what liabilities the government has, you're concerned about what assets it has. So just to use an example, Singapore, the government debt to GDP is 177%. And nobody thinks Singapore's in financial difficulties because it has a balance sheet that's got a lot of assets on it too. So the situation with regard to debt can look bad. It isn't necessarily bad if the assets are there to match the debt. Debt on its own is an insufficient indicator of whether the government's in a good state or not.
And that's the challenge that many governments face right now, is that the media probably only reports on the amount of debt a government has, but not necessarily the asset, because as maybe you have pointed out, that some of them don't even know where their assets are, which is why it's hard for them to kind of point out. So in a sense, most of the headlines only look at half the picture.
Heath, sorry, a quarter of the picture. You said a half the picture. Debt is only one part of the liabilities. The liabilities include other things that are not debt and can be as big as debt. So take the UK. Its liabilities over recent years, their public service pension liability has been as large as their debt. It's probably a little bit less right now, but over the last decade, most years it's been larger. So the debt in that sense is a quarter of the balance sheet, not a half of the balance sheet. So it's not a big component.
What would a good government with a good balance sheet look like?
A strong balance sheet is one where the assets are greater than the liabilities. And there's really not been enough experience of how governments really manage balance sheets to say this is the right percentage. But let's say if the balance sheet has a net worth equivalent to maybe half of the gross domestic product, that'd be a strong balance sheet. That is, assets exceed liabilities by half of GDP. At the moment, countries like the US or the UK, their liabilities exceed their assets by 100% of GDP. Liabilities are much larger than assets. That's a weak balance sheet. What a good government balance sheet would look like is one where there was, first of all, assets are greater than liabilities by a moderate amount. And secondly, the asset side of the balance sheet would be a mixture of infrastructure assets as well as financial assets. So you look at governments with the strongest balance sheets like Norway, a large chunk of their balance sheet is in financial assets. The New Zealand government's balance sheet, about half of the asset side is financial assets, not roads and bridges. So the more the non-financial assets, the greater the flexibility of the government, the greater ability to absorb shocks, and the greater ability to respond quickly to crises.
So you've established what does a good balance sheet look like? Does it matter what accounting system you choose to use? In some cases, I think most cases, the government, adopts a much more cash-based accounting. And what you argue for is the gold standard, which is that you should have accrual-based accounting. I'm not an accountant, so that's where I probably would like to ask you to help me demystify. Help me understand what's the difference between these two systems.
Cash accounting is exactly what its name suggests. It's where your books record cash in, cash out. That's it. The only asset you have on your balance sheet is cash. That's it. That's the cash accounting system. An accrual accounting system is what companies use. It's where you have a full balance sheet, where you record all your assets and all your liabilities, and you can get a comprehensive picture of what your financial position is. So it includes your roads, your bridges, your financial assets, your defence equipment, your houses, your land. All of those things are assets which are on your balance sheet. And governments are large and complex organisations, so they have a huge range of different assets and liabilities on their balance sheet. And those are all resources or obligations that they have to manage, and they can manage them well or better. And if they don't have accrual accounting, they may not even know what they are to start off with, never mind managing them well. So a government that uses cash accounting doesn't really know what its full set of assets is or its complete set of liabilities are. And to me, it's really hard to imagine how you can manage a government well without that information. I mean, governments don't allow companies that are listed in their jurisdictions to manage their finances in a way that simply requires cash accounting. They all require accrual accounting because without it, people won't invest in companies unless they know what their balance sheet looks like. You need the information for exactly the same reasons with governments. I don't think many people understand just how bad the accounting is in some governments. Like, I suspect in Singapore it's pretty good. But let me give you an example. The United States government, they have a term in their accounting system for the Defence Department that we don't have in New Zealand. It's called a plug. The technical term is an unsupported accounting entry. Now, this is just a tiny bit of background. The US government gets its financial statements, which are accrual-based, gets them disclaimed. That is to say, the auditor says, I can't express an opinion on these financial statements because they're too unreliable. I can't get enough evidence to say that I think these represent the real situation. One of the major causes of the that failure is the accounts of the Defence Department, where in the last set of financial statements, the auditor of the Defence Department said there were 24 material weaknesses in their accounting system, and one of them was plugs, unsupported accounting entries. That is to say, there were accounting entries for which the auditor could find no evidence. And what they do is, if things aren't balancing, they make up. It's literally an invented entry. And the auditor didn't say how much of the plugs there were for the last financial year for the Defence Department. But what they did say is that for the last 2 quarters, that is for half the year, they found plugs that had a total value of $197 billion. That's for half the year. The total appropriation for the Defence Department in a year is about $800 billion. So if it's roughly 50% of the value of their total appropriation is reflected in accounting entries that have no evidence to support them. Now, to me, as somebody who's interested in responsible financial management and a government, that's just unbelievable. That's a huge lack of financial control, and that's only one of 24 material weaknesses in their system, and that's the United States. That's the most technologically sophisticated country, or certainly the largest economy in the world. And that's how bad their government accounting is. And they're not alone in this. Just in the last 10 days, the auditor of the UK government has disclaimed on their financial statements and said he can't express an opinion because, and he cited the weaknesses in that case. They weren't the same sort of weaknesses, but he too couldn't express an audit opinion. If you looked at a private sector organisation, there's no way that our company could get away with that, that they would be, in deep trouble if they couldn't get an audit opinion. So what I'm just saying is that it's not surprising that there's a lack of trust in many governments if they can't even manage taxpayers' money, better than they do. And it doesn't arouse any kind of resistance or critical comment in the United States.
It's a paradox, isn't it? Because one of the most advanced economies in the world, with a lot of talent clearly in their country, why is it that they have such poor accounting practices?
I think it's a hard question to answer. I think it is, to a significant degree, politics, but it's politics within not what I would describe as a dysfunctional financial management system. They have the problem that I talked about earlier about they budget on a cash basis and they report on an accrual basis. That alone creates, mixed incentives and, to me, real problems in financial control. I think also it's as if, the expression that used to be used, $1 billion here, $1 billion there, eventually it adds up to real money. And we're now almost in a world where in the United States it's $1 trillion here and $1 trillion there. Eventually it'll add up to real money. It's like they don't care, like the managers are not held accountable for their expenditure. There's no, this situation in the US Defense Department has been going on, since at least 2001, and it hasn't been addressed. So there's no institutional checks in the system strong enough to compel the military to actually do their accounting properly.
President Trump wants to start a Department of Government Efficiency, right? So if you were to advise him on government efficiency, then what would you tell him?
I think what he wants that get that department to do is nothing like what I would tell them. I would change the budget and the appropriation systems. It's just the first test of any organisation is, can it account for what it's done with its money? It's like it's not an optional extra. It's a fundamental requirement of, I believe, of any organisation, and certainly governments require it of pretty much every other organisation operating in their economy, whether it's an incorporated society or a non-profit or whatever it is. They're required to produce financial statements and have them audited. Not really tiny ones, but any size is required to do that. I would get a half sensible financial management system. I mean, they do things in their appropriations system which are just, to me, quite incomprehensible. Like, one appropriation will appropriate money for a certain purpose, and another one will say this money can't be spent for that purpose. So the conflict between appropriations and laws, and there's a whole raft of dysfunctional elements. They could do a lot to improve their financial management.
In broad strokes, what would the real incentives be if you were to help, for example, them to reform their system? What would these real incentives or real measures look like?
The value is in what governments do. I mean, governments run education systems, they run health systems, they run law and order, they run defence. If those things are important, I would argue it's important that they're well managed and that you know what you're doing with the money, so that you can get, what your balance sheet shows you, for example, is what resources you've got. And you need to know that in order to know what your options are. So having a tight financial management system, to me, is it just enables you to do more of what governments are there to do. And a lot of public servants don't like the term efficiency, but if, for example, we're talking about HIP operations, if you can do them 10% more efficiently, you can do 10% more operations. That's got to be good if the HIP operations are valuable. And to me, it's really as simple as that. You want to get value for the resources that you have, and that means you've got to know what you've got and you've got to account for it.
And you need to know what's the return on investment, I suppose.
Yeah, you want to see that you're getting the return. Now, the return might be in the form of what we'd call technically outcomes, like it's health and the literacy rates or health disease incidents or something like that. That could be where the return for a government comes, not in cash flows, but nevertheless, you want to see what return you're getting for the investment.
Do most governments actually practice accrual accounting?
Yes and no. Yes, in the sense that at least most developed countries now, most OECD countries do produce accrual-based financial statements, and that's a dramatic shift in the last 30 years, and that's good. But it's only half the story. The no is that most of the OECD governments that report on an accrual basis don't actually use it in their day-to-day management of the government. That is to say, they operate fundamentally on a cash basis during the year, and at the end of the year, they turn around and say, okay, now we're going to produce a set of accrual-based financial statements. Now, you can probably imagine that if you're a manager in one of those agencies or departments of government and you've got a cash budget, you manage according to your cash budget all year, that's all good. You stick within your cash budget. And at the end of the year, somebody says, now we've got to produce accrual-based financial statements. So you've got to get together a whole set of information to produce a set of financial statements that nobody's ever going to use for anything other than maybe some parliamentary committee will look at the accounts and ask some questions, but it's not used for management purposes. So to me, it's not just about having accrual-based financial statements, it's having a financial management system that runs off those numbers, that, is managing the debtors and creditors in an active kind of way throughout the year, that's looking at what its surplus or deficit is on a monthly basis and deciding whether it's on track or off track. So it's yes and no is the answer to your question. A lot more report on an accrual basis at the end of the year. Very, very few actually use accrual information to manage their financial position.
In a sense, it's like the tail wagging the dog, I suppose, right? Where you're supposed to use the system, the accrual-based accounting to help you manage better, but in the end, you're using it only because you want to like pass a test, I suppose.
That's exactly how it is in my view. There is some value in having those accrual-based financial statements, but it's a fraction of the value you achieve by actually using the information in your budget process.
What prevents these governments from not just adopting the standard, but also practicing or implementing this in the way they manage their assets?
This is a little bit speculative, but in my experience, one of the major objections has come from the ministries of finance. In fact, just the people you would expect to be pushing these changes are resisting them. And I think there are a couple of reasons for that. One is that macroeconomics focuses very much on cash flows and debt. In principle, that doesn't need to be the case, but that's the practice. So most macroeconomists and ministries of finance are used to thinking about the government's fiscal position in terms of debt and cash flows. And so they're not keen to switch the budget over to an accrual basis because, for a start, they don't really understand it. They're not used to thinking in that way. They're not used to making decisions in that way. And I think the other dimension of that, which is kind of related, is that they're not really focused on managing the government. They're focused on managing the impact of the government on the wider economy. I mean, if you look at the debate in most countries about fiscal policy, it's about whether or not it's encouraging growth or whether it's speeding up growth or slowing down growth. The real use for accounting information is running the government. And governments are large, complicated entities. And just as you couldn't imagine running a large multinational company without a good set of information, so you really can't manage a government on that basis either. I mean, you just can't do it well.
So when you look at public finance, you look at countries that have done it well, are there any examples that come to your mind in recent history where you think that they've done well in not just adopting the standard, but actually implementing accrual-based accounting to help improve the way they run governments?
Well, this sounds a little bit self-serving, but I think New Zealand is the best example of a country that has really embedded the accrual information, the full set of information, into its financial management system. And part of the reason for that is the way it was implemented. It was implemented on an integrated basis. That is, at the time we moved to introduce accrual reporting, we also moved to accrual appropriations from the government to the departments and accrual budgeting. So the whole system moved at one point in time from cash to accrual. And in most jurisdictions, it's being done sequentially. They move the reporting to an accrual basis and they keep budgeting on a cash basis. And that just creates tensions and bad incentives, and it really makes it harder to take that next step. So I think part of the issue is the implementation strategy that's used. It should be done as an integrated package, not as a sequence of changes. Australia is another country that's done it reasonably well. The United Kingdom, to a lesser extent, so. But other countries like the United States or Canada, Canada to some extent too, has done not too bad. The United States doesn't budget on an accrual basis at all. It's still very much a cash-based budgeting system.
Before we delve into the example of New Zealand, I wanted to ask a little bit more about the upside of, I think the huge tangible benefits government can unlock if they switch over from just a cash-based accounting system to an accrual-based accounting system?
Well, I think the biggest upside is having a really good knowledge of where you are financially during the course of a year. To use the New Zealand example, the New Zealand government produces financial statements, accrual-based financial statements, on a monthly basis. Okay, so every month it produces a set of financial statements which show where it is and where it is relative to the budget for the year. And that means it has control of its finances in a way that doesn't involve the same sort of surprises that we used to have. If I can and then if you have that sort of financial control, you can, over a period of time, you can build up a stronger balance sheet. Okay, so you can create a balance sheet that's much more resilient and is better able to address shocks. And maybe I could give you an extreme example of how that acts to the benefit of a country. So New Zealand, when COVID hit, the government had a strategy which they described as going hard and going early and going hard. And the Minister of Finance and the Prime Minister both said that the reason they could do this was because they did have a strong balance sheet. That was their, if you like, their justification for taking the actions they did in relation to COVID. And if you now look back at the COVID period and look at what the excess deaths were associated with COVID, the excess deaths in New Zealand were 19 per 100,000 of population. By comparison, Australia was maybe, I think it was about 140, Singapore 177, the UK and the US both up in the 400s. So the excess deaths were really small. Now, clearly there were other things behind that, but one of the things that enabled the government to adopt the strategy that it did was the strength of its balance sheet. So I think that's, particularly if you're in what they call the vulnerable section of the population, that's a pretty good upside of having good accounting and good financial management.
And if I may just double click on that question, when you say the policy they implemented or the trust they were going with was going strong and going high, means that they were basically essentially spending a lot, increasing their government spending significantly, knowing for the fact that, the cost of containment was something that they could bear, because when they looked at their accrual accounted statements, they were fairly confident that this spending would not put them in financial ruin. Is that a fair characterization?
Yeah, that's a fair characterization. That's exactly what they thought. They could afford to do it.
Okay, I would like to maybe take us back to the early 80s when there was this time of Rogernomics that was being implemented in New Zealand. Can you please first help me understand, when this reform was needed in New Zealand, what were the kind of problems or challenges that New Zealand was facing as an economy?
Okay, it's a bit of a long story, but it basically started with the United Kingdom joining the European Common Market, and it started with the oil shocks in the 1970s, and both of those things had a significantly adverse effect on the New Zealand economy, and we started running deficits. The government of the day essentially tried to manage that position by protecting the economy, introducing subsidies for farmers, basically creating a very regulated, constrained economy. And that continued until 1984. And then we basically had an economic crisis. We got a new government, and the new government basically took the view that New Zealand needed to run its economy very differently. And so what happened over the period between 1984 and 1990, a period of 6 years, the New Zealand economy changed dramatically in the way that it operated. All the agricultural subsidies were removed, import licensing was removed, the Reserve Bank was made independent, the dollar was floated, the tax system was reformed, and another major early thrust of the reforms was to take the trading parts of government and turn them into corporations and make them trade as businesses. So during that first term of government, the 84 to 87, there was some really quite radical reforms undertaken. And in the second term, the government moved towards looking at essentially at its own public service and saying, well, we've got efficiencies out of the state-owned enterprises. We've seen efficiencies throughout the rest of the economy. There's no reason why the government shouldn't be able to generate some greater efficiency as well. And it was in that context that we reformed the financial management of the government. It wasn't by any means the first part of the reforms. It was actually at the tail end of the reforms. But also by that time, the population was used to reform. So what would have been otherwise seen as an extraordinarily radical set of changes was kind of normal. It was like, this isn't such a big change. So there was a climate in which the financial management changes could be developed and enacted and implemented all within a 2 to 3 year period. We didn't do it because we wanted to do better accounting. It wasn't a set of reforms that were designed to introduce accrual accounting. What the government's interest was to have better performance from the government. So we looked at what did we mean by performance, and maybe if you use an example from the private sector, if I asked you, how would you measure the performance of the Toyota Motor Company? Most people would answer that by saying, well, their profit, return on capital, return on investment, things like that. That's measuring performance through the eyes of the owner, okay? But if you're a customer in the market for a motor vehicle, and I ask you, how would you define the performance of the Toyota Motor Company? It's a different question and a different answer. And you then apply that question in a government agency setting and say, what's the owner of the government agency interested in? Well, much the same things as the owner of a company is interested in. Has it maintained its capital? Has it got a good strategy? Is it maintaining its human capital as well as its financial capital? And similarly, the customers, in the case of the government, are interested in, did the government deliver the services that it said it would deliver? Were they, if it said it would do this many hip replacement operations, did it do them? Were they done properly? And those, we said, this is what we mean by performance. We did accrual accounting because you can't measure performance on either of those dimensions unless you have accrual numbers. So you can't tell whether you maintained your capital unless you've got accrual accounting. And without accrual accounting, you can't tell what your services cost. So accrual accounting is not it wasn't in itself the aim of the reforms. The aim was to get better performance, but accrual accounting was a necessity in order to measure performance. And I suppose related to that, the other point that I want to make is that the relationship between the words accounting and accountability. That accounting is closely linked to accountability. And one of the things that we tried to design into the system was that managers, whether at the chief executive level or at other levels in the government, they were accountable, that they had clear performance expectations. We measured those, we knew whether they were delivered or not, and they were held accountable. So accounting was kind of quite closely associated with that desire for better accountability. And we regarded that also as being essential to getting good performance. That you wouldn't get good performance unless it mattered to the manager's responsible for it.
Actually, now that you share it, it's interesting the parallel that you make between the private sector and the public sector, because in private sector, I think, like what you shared, every listed company has to use accrual accounting. And that's how you actually keep a chief executive to task. But as you said, there's a possibility for deterioration. What causes that deterioration?
An easy answer is just to say entropy. Like systems break down over time unless they're actively maintained. And I think that's probably the major cause here. But I also think there's a sense of what I might call the Empire Strikes Back. I mean, the set of changes did impose a pretty tough accountability regime. And politicians, I mean, nobody really likes accountability all that much. Everybody would prefer to be a little bit less accountable, probably. So I think what's happened over time is that there's been an unwillingness to put so much effort into maintaining the system and being clear about what performance expectations were and holding people to account through performance management systems. And I think that simply reflects the difficulty in maintaining strong incentives to have managers and politicians actually be subject to accountability. The presumption that if they can avoid it over time, they probably will, unless there's really strong countervailing pressures. And I guess the way you could summarize that is that the legislation either didn't have sufficient of those countervailing pressures, or that the institutions that were meant to be supporting the legislation didn't put the effort in over the longer period. So some bits of it have remained, and as you were describing, kind of are fully embedded, but other bits weren't. And the bits that weren't embedded in quite such a strong way are the bits that have tended to deteriorate over time.
Can you take me through the journey or the transition? What were the huge inefficiencies that you saw back then that you thought needed resolution?
Well, there were a number of them. I mean, the way I would describe how our financial management system worked pre-1989 was very like many other government systems still work. We had it was a cash-based system for a start. Secondly, the Treasury wrote all the checks. So government departments didn't actually run their own accounting systems at all. The Treasury ran the accounting system. And if government departments wanted information to manage their activities, they had to ask the Treasury for it. And they may or may not get it. So it was a very centralized system. And what we wanted to do was to create a system in which each departmental chief executive, the head of each department, was responsible for managing their finances, by which we meant their balance sheet, their expenses, and their revenues. And so we essentially put in place a system which gave them the power. The Treasury closed down its check writing operations and said, this is your problem. You've got to write your own checks. You've got to manage your own expenses. But the major shift, the two aspects of the major shift were from cash to accrual. So they had to have a full accrual accounting system in place. And the second major component was that their appropriations and the budgets were also on an accrual basis. And that was a really big shift. And all government departments did it within 2 years. They had strong incentives to do it, but they did it. And then after that, it was a process of moving the government's budget as a whole from a cash to an accrual system. And then we had another government, a change of government, and the new government then put forward some principles of fiscal responsibility, which really reinforced what was in the Public Finance Act and said governments have got to manage their finances in accordance with these principles. And one of those principles was they had to build the net worth of the government in a way that it would act as a buffer against economic shocks. And that's exactly what then happened for the next 20 years. The government just progressively built up the strength of its balance sheet for, as I say, for about 20 years up until the global financial crisis.
What were some of these assets that you realized that the New Zealand government could build up as you?
Well, I think probably like most governments, it wasn't that we didn't really know that the government, for example, owned some national parks and had a lot of military equipment and it had roads and things like that. There were a lot of areas, though, where nobody was responsible for managing those assets. And in a lot of cases, we didn't really have reliable records. When we first tried to put together a balance sheet, the first balance sheet, there was a lot of stress because we had to figure out exactly what land government owned. That was probably the biggest challenge. There were a whole lot of different records. They didn't give you the same answer, and the auditor needed to be able to satisfy himself that we had reliable information. So the actual land holdings of the government were probably the most challenging piece of that. But what we also learned was that the asset records that departments had of many of their assets were also very unreliable. It's not like when you run a cash accounting system, you don't have any records of anything. You do, but it's just that they tend not to be they're not part of your accounting system. They tend to be ad hoc and they tend to be unreliable. So bringing them all together in the first balance sheet actually exposed a lot of problems where, for example, we would have one department owned a piece of land, another department had a building on it. Whose balance sheet should that go on? Maybe another department was using it. So there were a whole lot of things that were really about accountability for managing assets that needed to be sorted out. It was, what we found was it was very confused, and just by clarifying who was responsible for what also meant that we got much better management of all of those assets and indeed liabilities. The government wasn't that clear a lot of the time on exactly what liabilities it had either.
How do you eventually resolve these issues?
Well, there were a lot of them. There really were a lot of issues like that initially. And I guess the only answer to it is hard work and having adequate resource. I mean, we knew that this was going to be a challenging task. I had a group of 40 professional accountants in my part of the Treasury, and we work with departments to help resolve these issues. It was challenging, but we all were highly motivated, and we had very strong incentives. The departments had very powerful incentives. That the Prime Minister basically laid down the law to the chief executives that they had to make this work. And they were all really putting the effort in. It was a significant effort, but they were all issues that were resolvable. I mean, it wasn't that anything couldn't be resolved. It was just, understanding that what the problem was and sitting down and figuring it out.
In your case, I think there was a alignment of incentives between the politician and the bureaucracy, I suppose. Where in many other countries that maybe you've consulted on, this might not be the case, right? Why was the politicians for both parties, right? For both governments, why would they align with you guys? What were the incentives in place for them?
As I said before, the Labour government that was in power between 1984 and 1990, they realised that they had a major problem and that they had to make the economy more efficient, and they had, as part of that, they had to make the government more efficient. Governments in all major developed countries are such a large part of the economy. If they're not efficient, that's a drag on the whole economy. And the Labour government realised that, and the opposition party realised that, and so the fact that there was support from both parties did strengthen if you like, the hand of the Treasury in implementing this, because it was quite clear that if there was a change of government, these reforms were going to be continued. It wasn't like they'd die if there was a change of government. So there was that common view meant that there was really strong pressure. So their incentives and our incentives were really the same at the time. There was some resistance from departments because they became more accountable as a result of this. And there's probably been some degradation of the system in the period since, but nevertheless, the fundamentals of it are still very much in place and firmly embedded.
You mentioned earlier that the government also continued to build on its assets following the enactment of the Public Finance Act. Can you help me better understand what was the Public Finance Act and how did the New Zealand government continue to build its assets after this time of sweeping reform?
The Public Finance Act basically put into practice a completely new financial management system, and I should say that was done in conjunction with another piece of legislation, the State Sector Act. The Public Finance Act addressed the issues of government financial management. The State Sector Act addressed public sector employment questions. So prior to those two pieces of legislation, we had operated a very conventional Westminster-style government where the heads of government departments were permanently appointed. They were called the permanent heads of government departments. They were there until they retired at a certain age. The State Sector Act made them the chief executives of their departments. It gave them the authorities that were very similar to the chief executive of a company. But it also imposed on them some very significant accountabilities for delivering services, for saying what they'd deliver and being held accountable for delivering those services. The Public Finance Act was what determined what specified the move from cash to accrual accounting. It changed the nature of the budget process. It changed the nature of what appropriations were made. And the accrual accounting really just kind of supported those set of changes. It did other things like it made government departments responsible for their own cash management within an overall cash management system that the Treasury ran. But essentially, those two pieces of legislation were designed to change the way the government operated, with a very clear focus on what services were delivered, what they cost, and a really strong presumption that departments would operate within their budgets. And in the period before the Act, for the previous 2 decades, the New Zealand government had run deficits every year. So in that period after it ran surpluses every year. And the period before that, the budget was almost always exceeded because departments didn't believe that. They believed that if they overspent a little bit, they would demonstrate that they needed more money. Whereas in the period after the Act, they always came in under budget. So there was just a change in the whole financial system and the financial discipline within the system. In the period up until the financial crisis, it built up its assets by running a surplus. But it ran surpluses in pretty much every year from 1995 through until 2008. And it went from a position where its net worth was negative to one where its net worth was about 55% of GDP. So it was basically just consistently running surpluses. It's fair to say that in the period since the financial crisis and COVID, there's still significantly positive net worth, but at this point, a chunk of that is from the fact that assets have been revalued, and that also shows up in net worth as well as surpluses. So over the whole period, it's a combination of running surpluses and the value of assets progressively increasing.
And one of the things that emerged out of it was that you had a much more transparency over public finances, which I think you argue would improve democracy. How would improve transparency on public finances through the accrual-based accounting actually help enhance democracy?
Well, it's partly through the move to accrual accounting. One of the other features that was brought in not by the government in the 84 to 90 period, but by the new government after 1990 that I referred to earlier with the Fiscal Responsibility Act, that was when the monthly financial statements were introduced. And one of the things that does, it's not just an internal management device so that the government can see how it's performing month after month during the year. It's also it's released publicly, so the public can also see whether or not the government's sticking to its budget and whether it's looking as if it's going to manage within the budget for the year. But the other thing that was done at that time was that there was a legal requirement established that before every election, there had to be what was called a pre-election economic and fiscal update. So about 6 weeks before a general election, the Treasury had to produce a set of financial statements and an economic update. And what that meant was that it changed quite significantly the nature of the political contest that was taking place. Political parties became much more conscious that they didn't want to be seen to be proposing to spend more than could be afforded. So it meant therefore that they tended to promise things that were attainable so that voters could vote for them and be reasonably confident that they could do what they said they were going to do. And in fact, they could, and they did it. And therefore, voters could also feel like the government was trustworthy. And I think that while trust in politicians internationally has probably declined, certainly in democracy in the last 20 years, it hasn't declined. It's declined in New Zealand too, but it hasn't declined as much as it has in many other countries. And I think that's maybe only a small part of it, but that's one of the reasons for it, I think, is that people believe the financial statements of the government when they read them, whereas in a lot of other jurisdictions, they either can't understand them or they have good reason for not believing them.
I think what you're arguing for is that, essentially by having more of these monthly financial statements where you give a clearer sense of where your finances are, the true state of finances, it really forces politicians to be more constrained in the kind of promises they make. They can't just be pulling stuff out of the sky, because now people have a document that they can refer to and they can see what's actually possible or not.
Yeah, that's exactly right. And the other thing is that we read about interest rates, what's happening to interest rates all the time in the press. But in most jurisdictions, you only read about the fiscal position of the government very rarely, maybe around the time the budget is released. But generally, that's the only time when there's really significant debate around it. In New Zealand, the fiscal position, the financial position is basically in the press every month. So there's also a sort of like it's part of the consciousness. It becomes a sort of a cultural thing that we expect the government to be fiscally responsible, and politicians understand that.
If I may add, because I think in Singapore, the government is known to have a huge surplus. So, but it's very opaque to a certain extent. It's not transparent to the public how much you actually have. Part of the reason, I suppose, is that they don't want people to be asking for more. If you can see how much you have in the bank, then maybe some would argue that you should spend more, and maybe they're not comfortable with that, or they prefer to have more in the banks.
I understand the argument that if you've clearly got so to speak, cash in the bank that you can be encouraged to spend it. And that's still a problem in New Zealand in the sense that not only were we generating surpluses over that 20 plus year period, we also had created what was called the New Zealand Super Fund, which is if you like, a national wealth fund, public wealth fund. And that was designed to pre-fund the old age pension that the government is costing the government more on an annual basis. And the Minister of Finance was unhappy about that because he couldn't treat as an expense the contribution to that fund. And for a couple of years, there was quite a lot of tension because the minister wanted to expense it, and under accounting standards, he couldn't do that. In the end, it became accepted that that was a legitimate expense of the government, and the political pressure to spend the money just evaporated, really. There was a recognition that the government should generate a surplus, and it should use that surplus to invest in assets which built up this fund. And so the fund is, it's probably in some ways mirrored on some of the governance arrangements that are used in Singapore and used very effectively. And it's been a very effective investor of that those contributions.
What are some of the lessons that other countries can learn from New Zealand's example?
I think the first and most obvious lesson is that it can be done. That until New Zealand did this, no other government had done it in the way that we did it. So it is possible. That's in a way the first lesson. The second lesson is that technology has moved a huge amount since we did that. We did that that reform was in 1989. 1989 was the year that the World Wide Web was invented. That's how long ago it was. It was 10 years before Google. And so a government that's seeking to do that now can do so with a lot more technological support than we had then. So in that sense, it's not necessarily going to be cheaper, although it should be, but it's certainly doable. But in some ways, the major other lesson is the value that you get from it. I mean, I used the COVID example before. It's to me, that's not an insignificant demonstration of the value of having a strong balance sheet. And the way New Zealand came through the global financial crisis, and New Zealand had two major earthquakes around the same time as the financial crisis, and New Zealand absorbed those shocks, and within a relatively few years was being called the rock star economy. Now, I think rock star probably is not a term you'd use now, but it came out of the crisis and through those earthquakes in really good shape. And it's that sort of strength, resilience that comes from having a strong balance sheet that I think is a really powerful lesson.
If you were to look at New Zealand, what are some of the things that is unique and special about New Zealand that you wish the world would know more about?
I've lived and worked outside of New Zealand for quite a lot of my career, so I'm kind of used to looking at New Zealand from the outside as well as from the inside. I think in some ways it's not unique, but it's an attitude that I think we share with a lot of other smaller countries, particularly maybe smaller island countries, but it's a can-do attitude. It's that we see challenges and we take them and we find a way of making something work. And I think part of that is that because we're a small economy, we don't have as much specialization. I mean, when I go to the United States and I visit a government agency there, there's long corridors of people with very narrow specializations, and you have to be really senior in the organization before you start to get a broad view of an issue or of a policy. Whereas I think we see things much earlier in our careers. We can see more broadly, and I suspect that Singapore shares that in some ways. I think a number of other. I think it's a little bit the same with Australia and Canada. That kind of attitude, certainly in Australia, just a willingness to take something on and a belief that you can do it. That was certainly necessary when we did these reforms because we couldn't point to anybody else who'd done them. So we had to make sure we got the framework right and then implement quickly.
If I'm not wrong, it was Singapore and New Zealand that started the TPP back then before it became RCEP. But it started with Singapore, New Zealand, and a few of the other small countries before it snowballed into a bigger multilateral free trade agreement. And I think that's because we're small in that sense.
Yeah, and we're both very open economies as well.
My last question is really much more lighthearted. It's nothing to do with public finances. It's more to do with your role as an educator, as a professor. You taught many students, and I'm sure many of them come to you for office hours and they ask you for advice when they enter the working world. What's that one piece of advice you give them as your students go into the workforce?
To me, the most important thing is to understand that your educational qualification is an entry ticket, and that's all. And this sounds like tough advice, I suppose, but the entry ticket won't last long. It's not your degree that will make you valuable to your employer. You've got to not rest on your laurels, I guess is the way I would describe it. If you've done really well in university, that's great. Now go out and do really well somewhere else. Take the opportunities that are. Don't be afraid to take sideways steps or take risky steps. Just take opportunities, but understand that you've got to earn what you receive.
With that, thank you, Ian, for coming on.
It's a pleasure. I hope you make something of it.
If you enjoyed this episode, click on the video that's appearing on the screen right now.